Good morning, everyone. Welcome back to the Carrick Property webinar series. We have a brand new series of eight episodes starting today. And once again, we are really excited to bring some really quality projects to you for your consideration. Today, we are bringing in an outstanding product to you. It's a, excuse me, it's a landmark London project. Once again, we're partnering with One Global Property Services, and really this project ticks all the boxes once again. It's a quality product. It has a strong investment case, and it's underpinned by Barratt London, who are one of the foremost developers in the UK. Once again, I'm joined by my partner in crime, George Radford, the MD of One Property Global Services, Middle East and Africa. And I look forward to sharing the next 25 minutes with you, George, and you, ladies and gentlemen. Without further ado, George Radford.
Brilliant. Thank you, Brad, and thank you to you and your team for the invitation, and a very warm welcome to everyone around the world. Good morning, good afternoon. It's a real pleasure to be here. My name is George Radford. Just by way of background, I'm a chartered surveyor. I've worked in property now for over 20 years. I spent the last 10 years or so working with clients across the Africa region. So I'm very well placed to help clients, especially in the Africa region, but globally, invest in direct residential international property. I understand the investment drivers behind why clients want to invest in properties in the UK, for example, but I also understand some of the challenges associated with doing so. So I'm very well placed to look after you. Let's have a quick look then at One Global and provide a bit more background on the business itself. Might be a slight delay. There we go. So One Global Property Services, we're headquartered and founded in Singapore. We've been going since 2017. I'm one of the founders of the One Global Middle East and Africa business. And quite simply, what we do is we work with individual clients around the world, and we help them to effectively and efficiently invest in international residential property. And we do so in a way that is designed to optimize the investors, our clients' return on equity invested. And you can see at the bottom there, we've won many awards over the years as a result of delivering a top quality service. In terms of the business model, quite simply, at the front end, we go in and we do the due diligence and the research and source the best products, which we'll see when we come on to Eastman Village, and make sure we're working with the best developers in market, and ensure that clients have access to the products that are the safest, but also most likely to deliver the best return on equity. And we'll then understand the client's investment drivers and give investment advice based on clients' criteria, and marry up their requirements with the best product. We'll appoint the lawyers in the local market and facilitate the conveyancing process. On the mortgage side, which we'll delve into in a bit more detail at the back end of the presentation, we facilitate the mortgage and get the financing in place. When the property completes, we will deal with the handover, the lettings, the management, the rent collection, and then when clients wish to exit the investment, 5-10 years down the line, we'll be there to help resell it back into the secondary market. So let's have a closer look at Eastman Village. Before I do that, I think let's just take a step back and reflect on the UK market as a whole, and London more specifically. So why do clients continue to invest in the UK? A number of reasons, really. It's a safe haven market. It's a tier 1 economy. It's the 5th biggest economy in the world. It's a very mature property market, so it's got a very sophisticated investment infrastructure. It's very sound, safe and secure, which is what we're looking for our clients. From a financing perspective, there's still good, affordable finance available for international investors. Sterling is still relatively weak compared to the highs we've seen over the last decade. So there's good value there, especially for US dollar-based investors and many other currency holders as well. Maybe less so rand, but nonetheless, sterling is still relatively weak. And then the UK is dealing remarkably well with COVID now. It's been very challenging. The vaccination rollout is probably one of the global leaders, really. And we are slowly but surely getting the economy started again. There's a very positive economic outlook here. There's a lot of renewed confidence in the United Kingdom. And if we look at the property growth over the last year, in 2020, the UK grew in excess of 7% despite COVID, which is quite remarkable and shows great resilience. And then let's look at London. I mean, we'll come on to Eastman Village, which is Harrow in northwest London. But London as a market, it's been identified by PwC as the #2 city for investment prospects in 2021. It's been highlighted by Savills as delivering growth, up to around 4% for 2021, which is one of the best performances of any European city. Schroders have identified London as the #1 city globally, and there's a whole host of things that still exist in London. It's still a financial centre of Europe, one of the main financial centres of the world, insurance capital of the world, tech and startup capital, one of the biggest in the world. It's a huge education hub, and the economy is still remarkably strong. So I think hopefully that adds a bit of colour to why we're looking at the UK and why we're looking at London. And now let's look a bit closer at the product we've all come here to see today. So Eastman Village really is, as Brad mentioned, a very significant development with Barratt London, who are part of Barratt Homes, the biggest UK house builder by volume. On average, they've delivered 17,000 new homes, which is quite remarkable. That's bigger than any other UK developer. But really, more importantly than that, they deliver a very, very good quality product, and they are the most award-winning developer over the last 10-15 years as a result of that. So not only are they biggest, but they're arguably the best as well. And they're a FTSE 100 company, which is a big accolade and shows what they've achieved, I suppose, over the years. They've been going for 60 years, and they're a true national builder. But what really appeals to me about this development and working with Barratt is they are a UK domestic house builder. They're not a developer that's purely building for the international buy-to-let market. In fact, far from 90% plus of their developments are actually sold locally in the UK, which is very important for tenanting, but also on the resale side for our clients investing in these type of products. So let's Harrow, northwest London, very well connected from a road perspective as well. You can access the M25 very easily. Heathrow Airport is a short drive away, within about 20 minutes of Harrow, and very easy access into central London. I'll show you that in a second. The development's actually located here, Harrow, between Harrow and Wealdstone, and the nearest train and underground station is located about a 10-12 minute walk away from the property. But what's happening is there's a huge regeneration project, which I'll elaborate on shortly, which is really driving the growth within Harrow and more specifically within Eastman Village. So in terms of Harrow as a place, it's world renowned for Harrow School, obviously. It's one of the finest British public schools. Winston Churchill was educated there, a whole host of other prime ministers, and naturally not all of us can afford to go there. probably aren't smart enough to go there. But in addition to that, there are in excess of 32 outstanding schools within the Harrow area, state and private. So it really is a fantastic location for education. And in addition to that, it's very, very well connected. And it's one of the greenest suburbs, actually, Harrow, in Greater London, which means it's a nice green, leafy place to also live. And what we're seeing more and more is, you know, people are moving out of central London. It's not a mass exodus, but there is definitely more of a desire for more outdoor space, and places like Harrow that give that connectivity into central London within 15, 20 minutes, depending on where you're trying to get to, really are set to do very well over the next 5 to 10 years, in my view. From a connectivity perspective, you've got over 5 train lines in very short distance from the property. The underground line is the Bakerloo line, which takes you straight into central London. You can get to Oxford Circus in 37 minutes, and on the overland train you can get to Euston in around 15 minutes. So very, very well connected, great for commuters, so you can still have the flexibility of living on in Greater London with access to central London, but also very easy to get out of London, which is very important. So let's have a slightly closer look at the development itself. So it's steeped in history, and it's actually the old Kodak camera site. Doesn't really take an expert to work out why it's shut down, given how powerful our mobile phones are nowadays and how many pictures we take on there. So the old film cameras, unfortunately, have more or less died a death unless you're a professional photographer. But 125 years this factory was existing for. And it was a real part of the community here. And what's happened is the whole site has been redeveloped, which forms part of the master regeneration plan. And it really presents a remarkable opportunity here to buy into part of British history, but very much so part of the history of Harrow. I'm just going to have a quick look at regeneration. So I've mentioned why we invest in the UK, why we invest in London. I mean, London as a whole is still only delivering around 50% of the housing stock required. Over the last decade, average housing units delivered in London, 160,000, and we need to be way in excess of that. So I'll show you the benefits of regeneration in a second, which ensures that the markets we're investing in outperform. So what we've got here is a £1.75 billion regeneration project, which is creating 5,500 new homes. It's creating 2 new schools, the complete regeneration of the town centre, and various other exciting stuff, which I'll elaborate on a bit later in the presentation. But in excess of 3,000 jobs are also being created, which is fantastic for the local community. So just to elaborate on that in a bit more detail, so this is Eastman Village. This is the master plan. We're really focusing here on phase 1. The development, which I'm going to delve into a bit more detail later on, is this block here, which is Penrose Apartments, which is the final phase of Eastman Village. These residential apartments here are being built by Barratt already. They're completed. And as I mentioned, we're focusing on the final phase. There is a gymnasium, and there's going to be a Metro supermarket, a new school, leisure facilities, shops, cafes, restaurants. So it's called Eastman Village because we are really creating a village here. And I mentioned earlier, 5,500 new homes are being built as part of the regeneration programme for the wider Harrow area. Barratt London are building 3,000 of those new homes. And then phase 2 is over on this side. You've got some commercial office facilities at the top. So it's not just a big residential scheme. It really is trying to build a community. So let's have a quick look at some regeneration. I won't bore you with lots of facts and figures, but ultimately this is showing some key areas across London, and that is the average London growth there, that red line, property price growth, I might add. And what we're trying to show here is in all of these areas, these bar charts show how they've outperformed as a result of regeneration. So the message here really is, if you buy well into a key regeneration area at a very early stage, then invariably you will outperform the wider market. Just to look at that in a bit more detail on the next slide. Bear with me, there's a slight lag here. There we are. And then again, it's quite a small chart. Apologies, we're steaming ahead now. There we are. The green bars there, they're showing the average growth again across some of the key locations in London that have undergone massive regeneration. And then the yellow bit, that is how new builds and regeneration developments like Eastman Village have outperformed the wider market. So I suppose the message here is, we're not just investing because it's a nice development and it looks good. We're investing here because it makes investment sense. And we know that by buying in this type of development in a key regeneration project and getting in early in phase one, we will optimize our growth from that asset and our return on equity. And that's what we're here to achieve. So something that's becoming, well, it's very close to my heart, and it should hopefully be to everyone's heart, given what's going on in the world, is trying to be as green as possible. And Barratt are very much in tune with this and trying to make the development as green as possible, and also contribute a lot to the local community, obviously by building this, but also by facilitating investment into local parks, and having things in place like a car club, Enterprise Car Club, which is a great scheme where if you're a member of Enterprise, you can pick a car and drop a car off in key locations across London. And it avoids, which is very popular with younger people, the need to actually own a car. Gives you the flexibility, reduces the cost, but also ensures that we're much greener. And so there's some softer points there, and when we share the presentation, do read over them. But the message is that they're very focused on trying to be sustainable, which is massively important in today's world. Just to revisit the master plan, I think I covered a lot of this, but our development is here, Penrose Apartments. These 3 blocks here are under construction. These 3 blocks here have completed. This is actually the original chimney stack that you can see there, which is listed and will be retained from the Kodak factory. We've got some retail facilities going in here. There's some community space and commercial office space going in up here. And then the rest of the development here is largely residential. And there's a new school also being built, which I believe is down here. So yeah, really a small village, I suppose, or a big village. Let's have a look at the next slide. So Penrose Apartments is the tallest of all of the blocks within phase one. 71 private apartments, and the design is fantastic because it's very much again in tune with what people are after now. Very, very open apartments, and I'll show you some of the floor plans in a minute. All of the units have outdoor space, very high specification and connectivity, which is great for home working, which is becoming obviously more and more of a trend. And there's great community spaces here as well. So 9 stories in total, a mixture of 1, 2 and 3 bed units. And you can see on there the 1 beds are starting at 328,000, 425 for the 2 beds, and there's 1 3-bed unit at 575. A couple of other points to make here is that The tenure here is a 999-year leasehold. It's a virtual freehold. It's really important because 150, 250, 500-year leaseholds. This is a 999-year leasehold, and also the ground rent is a peppercorn rent, which essentially means you're paying every year a nominal amount to the freeholder. Instead of it being 250 or 500 pounds, it will be a few pounds. Really important. It helps your yield, but also it's very important for lending purposes, because a lot of mortgage lenders now, they won't lend to developments where there are excessive ground rents in excess of 0.1% of the property value. So it may be a small point for those who aren't so close to the market, but it's actually a very big point, because it means that the title is much longer, the cost of owning that property are much less, and the ability to finance is far greater. So in terms of the actual floor plans themselves, this is your typical 1-bed unit, really nice open floor plan. As I mentioned, all the units have balconies. This is a good example of a 2-bed unit, big open. The 1-beds are around 50, 55 square meters, the 2-beds around 70 square meters. I know in terms of SA, that might be a bit small. Well, actually, the new developments that we see going up are not too far off that, are they, for 2-beds? The older buildings, sort of 20, 30 years old, were much larger, but I think SA is actually coming more in tune with the UK from a size of the apartments. But all very nice, spacious, open plan apartments, all with outdoor space. That's the 3-bed unit there. And we will share all this information with you, obviously, so you can have a closer look. And in terms of a specification, I was at the development last week, and I was there also in November. It's great to see the progress. It's well underway. I've been in the show apartments, which is obviously very important for us and for our clients, to be close to the product. And I was absolutely blown away by the quality of the finish. Again, we will share with you some videos of the show apartments, and do have a look, because it really helps to show the quality of the finish that the developer is impressing here. And as I said, I've visited many properties in my time, and I was particularly impressed with the quality of the build, but also the finish. So yeah, please have a look at the video when we share that with you. A couple more slides and then I'll pass back to Brad. So mortgages, obviously very important. Where possible, we're looking at investments, obviously, and how can we make our money work as hard as possible for us. And we're talking about property. In order for that to happen, ideally, we want to leverage. We want to take a mortgage. So there are a number of lenders out there and different mortgage products available. Obviously, it does depend on individual clients, and what we would always do is to assess individual clients based on their personal circumstances, assess their financials, and then provide some mortgage options based on that. And it obviously does differ from person to person, and there are certain things that build a stronger case from an income perspective, from an employment perspective. From a nationality perspective, having a dual nationality can help. If your spouse has a British passport, for example, that can help. Any sort of footprint you've got in the UK, that does help, but it's not essential for any clients on the call who maybe don't have a footprint in the UK and a South African like my wife, and don't have dual nationality and are employed in SA. We've got options for you as well. So we would assess your circumstances at the front end, and that would very much dictate the mortgage options available to you. And then in terms of the products, we can get up to around 65%, can get a bit more, but I'd like to be conservative, 65% mortgages, both fixed rates and variable rates. In the United Kingdom, we've got 2 different mortgage products in terms of interest only, which we don't have in South Africa or other African countries, but also your typical repayment mortgage, which we will be more familiar with. And then in terms of the qualification process, I mean, I touched upon some of that, but I would say, typically speaking, if we're looking at sort of minimum income thresholds of around £50,000 for clients who join South Africa. I know there's clients from all over the Africa region, but in rand terms, let's say £1 million a year, then that will be a very good starting point to be looking at a number of different lenders in the market. As I mentioned, every client would be pre-qualified up front by doing a mortgage fact find. That would give us an indication of what lending is available to you, and naturally that would dictate the investment strategy moving forward, because once we know how much you can borrow and how much equity you want to invest, then that gives us a budget, and then we can align that with the most suitable products for you. And then my final slide, and I think remarkably I've kept in within my time limit. So just to touch upon the purchase process. So how this works is naturally we require consultations with clients to ascertain your needs, and then we would recommend the most suitable products. But on that basis, if clients are interested to progress with this investment, let's say it's a one-bed apartment, to secure that unit, we would require a £2,000 reservation fee, which is refundable upon exchange. But that ring fences your unit and secures your unit. We would obviously undertake your mortgage approval at that stage as well to ensure your lending is in place. And then lawyers would be appointed, and clients would be required to pay a 10% deposit plus cost. And again, on a one-bed scenario, that would equate to around £34,000, including the 10% and any legal fees and so on and so forth, which would be due, let's say, in the next month. And then you wouldn't need to do anything. Sorry, I didn't mention, I don't think, that the completion is in summer, English summer 2022. Not that we get much of a summer, but say 14 to 18 months away from now. So you've paid your initial 10% deposit now, and then you would pay your remaining deposits on completion in say a year and a half, which would be typically 25% plus your cost, and then 65% would be covered by the mortgage. So on completion in July, let's say 2022, clients would be required to pay an extra 114,000. So the total equity requirement, which is a combination of the completion deposit and the exchange deposit and the initial reservation fee, is circa £150,000, but spread out over a year and a half. And then based on the assumption of a 65% mortgage and very conservative growth assumptions in line with historical trends and forecasted trends in the market, on that one-bed unit, we'd be looking at a return on equity around the 90% mark over a 10-year hold, and that would equate to around £138,000 of profit, which is a combination of rental income profit and also capital growth on the purchase price. So that concludes my presentation. I'd just like to say thank you very much for attending. It's been a real pleasure, and I'm delighted to be able to present such a significant project to everyone. And thank you again, Brad, for the invitation, and I'll pass back to you.
Thank you, George. Appreciate the presentation this morning. And again, I'm going to say, we're really, really excited about Penrose. For those of you who have been following us since the beginning of the year and attending our webinar series, you'll notice that we've diverted from or deviated slightly from our previous presentations and products where we were presenting entry-level products of around about £180,000 upwards. We've had a significant interest in products of this nature, i.e. Penrose, where clients have looked to products from £350,000 and above. So this just sneaks in at £328,000 at the entry level. But nevertheless, there has been a significant interest, and specifically in London. As South Africans all resonate with London. I know Africans do as a whole. So we think that, again, this ticks all the boxes. I'd like to thank you all for joining the webinar this morning. We understand that if Penrose is not what you are looking for, we have a host of projects that we have on our portfolio. And certainly when our property consultants make contact with you, they will present those projects to you. So I hope you have found this morning informative. We look forward to talking to you further in the webinar series to come. If you have any queries at all, please feel free to contact me personally, and I'll be sure to pass on a really knowledgeable and qualified property consultant who can assist you with your needs. Ladies and gentlemen, thank you very much, and see you next week at the same time. Thank you.
Thank you.